What's up, everybody? It's LG Doucette here. You're listening to The First Mint, a podcast where I talk about NFTs and the world of Web3. The podcast comes out every Monday morning and occasionally on Wednesdays. If you like this content and you want some more, feel free to visit our Twitter page at The First Mint. My guest today is Tascha from Tascha Labs. She has a PhD in macroeconomics and somebody that I've only been following recently. Mainly, I came about her through some of her fantastic threads about tokenization, case studies, use case, everything that is going into crypto. And I'll tell you right now that she is not too crazy about NFTs. She does admit that she owns some, but she really doesn't think that there's much use case for them. And honestly, hearing her talk and even kind of ruminating in some of my thoughts in the last couple of weeks, I tend to agree with her. It's been fun. It's been an interesting couple of years on NFTs, but the current state of them is something that will clearly need to change for it to be flavorful, for it to be something topical in the next bull run. She even goes as far as to compare today's NFTs from a technology standpoint to typewriters, where, yeah, some people collect antique typewriters, but nobody really uses them. There's no actual use case for them because today there's far better technology for doing what typewriters are meant to do, which is like writing a letter. It's an interesting analogy. It's one that I've never really heard or heard, somebody use in terms of referencing how early we are with NFTs. The main reason I want to have Tascha on is actually to talk about her expertise looking at economics. I can't really think of anybody more qualified than her than to tell us more about the macroeconomic conditions that are going on right now. And she does reaffirm a lot of the stuff that we know, or at least you might know if you're reading the news, you're keeping track of interest rates and war and all the stuff going on in the world. She does reaffirm a lot of that, and it is good to hear it from somebody who's confident and who definitely knows what they are talking about. So I hope you enjoy my conversation with Tascha from Tascha Labs on The First Mint. Ladies and gentlemen of The First Mint, we have a very special treat for you today. Tascha from Tascha Labs, someone I've followed for quite some time. Her content is very good. She's PhD macroeconomics. She's also one of my favorite content creators. And I honestly don't know what she's going to tell us today. She told us that she might have some harsh truths for us about the crypto market, about the market in general, but I'm going to leave it to her. Tascha, thank you so much for coming on the show.
Thanks for having me.
I always want to start, and it's very typical to do this on podcasts and interviews, but I want to know, when did crypto first land on your radar? How long have you been in crypto, or have you followed crypto, let's say?
Yeah, so like you mentioned, my background is in macroeconomics. I've been in macroeconomic consulting for over 10 years. And I'm also a tech founder. I own a SaaS company, software as a service company, specialized in audio publishing space. So when I look at crypto, it's from this synergy between economics and breakthrough technology. So I think I have a pretty unique point of view from that perspective. In terms of crypto, this is something that when Bitcoin first came out, I think I first heard about Bitcoin in like 2013, 2014. But at the time, it really didn't really interest me, to be honest. It just felt like a pie in the sky experiment, right? And even to this day, that is not something that I find particularly interesting, which is a store of value asset, has some better features than gold, let's say. Is that groundbreaking or world changing? I don't think so. But can it be a store of value asset? Yeah, sure. It could be. So, but what really interested me was, after a DeFi summer in 2020, when I started using some of the DeFi product, during the pandemic, that's when I realized this is actually much bigger than I originally thought. And so also I have some friends also in the startup circles were, doing like blockchain related startup ideas in like back in 2016, 2017. At that time, it felt like those ideas were solutions looking for problems. And I wasn't like too much interested at that time either, but it was really after DeFi started, that I started paying more attention and started thinking about the space more and more, and investing in the space too.
What I guess maybe a more appropriate question than Tasha is saying that you're thinking very much about like the use case of tech, right? And as a founder yourself as well, what would you say? And it's okay if the answer has changed over time, but initially when you got into it, DeFi Summer, you're interested. What was the use case that you were kind of keen on at the time?
Like you said, it definitely has changed over time. When I first used in DeFi, I was really impressed just by the user experience and how easy it is to actually exchange different assets. And I think that was quite shocking at the time. It was like, I remember the first time I used a DEX or something, and afterwards I just lied on the couch for a few hours and just trying to think this through, because it was a kind of a paradigm shifting kind of experience. I'm not really exaggerating because I'm very used to trading assets, investing in assets using like a centralized platforms. But it's like a very different experience, and you didn't realize that was actually a very cumbersome experience until I started using DeFi, right? And I realized, oh, this can be so much better. And then over time, I started to see really, to me, if we're talking about like the use case of blockchain or crypto space, to me, the biggest thing is, I'm sure you've heard about this before, is the Internet of Value, is that we have the possibility to have public platforms that open and permissionless to allow any type of values to be exchanged under a unified standard, such as like ERC20 is an example of the unified standard. And it's something so basically anybody can create something on this platform can create a representation of value on this platform and trade with any other values around the world and have liquidity for that. And that to me is the groundbreaking part. And that to me is the part that basically tokenization with liquidity. And on the global scale, open permissionless, that is going to allow so much innovation to happen, and that is going to, give voice, give representation of so many hidden values that we create in society, and as a result, create an additional layer of GDP and create additional, professions and investment classes and so on and so forth.
Right. Okay, I like that. Is that how you felt at first? Because it sounds like that's kind of your current bull case as well, or at least your
Yes.
what you
That's where I am right now. That's my current bull case for the Web3 space.
Right.
It's a general outlook about the industry, about where the internet values is going. It does not mean necessarily, a bull or bear case for any specific tokens or any specific platforms.
Got it. Yeah. So that, can you compare that? Can you contextualize that for me even further? Because if that's something that's like, I agree with you. It's like the exchange of value internationally is incredibly valuable. Is that? Do you see that primarily as a financial exchange, right? As in. I'm assuming when you were using the DEXs like Uniswap or something like that, you were, I guess, blown away that you could just swap, ETH to USDC to Uni to Link to whatever you wanted. Is that the primary use case of just being able to trade different currencies, or are you talking about a whole different world of possibilities there?
I'm talking about any kind of assets can have a representation on chain in the form of a token, whether it's fungible or non-fungible. And because they're a unified standard and it's a global network, open access, it allows a possibility to give liquidity and create secondary markets on so many different types of values. So I know that still sounds kind of abstract, right? So because the reason it's kind of abstract is because we don't have all that many good examples yet. At current pretty primitive stage of the development of Web3 space.
Uh,
A big problem right now is that we don't have we don't have actually, we have tokenization, but we don't have a lot of actual values backing that tokenization, right? So most of the Web3 applications to this day are what I see as the dog chasing its own dog, like chasing its own tail. It's like a project created around the tokenization, but the project itself does not necessarily has a user demand or create a value added. A prime example for this is play to earn, which has been super hot over the past year. But if you look at most of play to earn quote unquote games, they are not really like traditional games that people are attracted to play because it's addictive, because it's relaxing, because you just love playing. And that in itself is a value added in people's life, right? But play to earn games, people play the so-called games because it's just a more active form of yield farming, of earning posinomic tokens. So the product, the underlying product itself, does not create sufficient value added. So I see a bull case going forward is to, if we figure out how to combine tokenization with products and services that actually has value added, and then give a, more, give a representation of those value added on a public platform like a blockchain, I think that would be a more sustainable, bull case for the industry.
Is that something that you think would drive adoption? Finding that more appropriate use case, let's say.
What I recently something I recently wrote about is integration of tokenization into Web2 products. Basically, you see these people call Web 2.5 kind of projects combining traditional or Web 2 products and services with tokenization. So I think that would be a driver of adoption. It would not be the end all be all, but it would be the next stage driver of adoption for a more broad-based adoption of blockchain and crypto assets, because that will get people who do not trade tokens, are not into speculation, are not like hardcore degens, into actually stepping into the blockchain or Web3 universe through some products and services that they are already using in their daily life. Like, I've been talking to quite a few projects that are traditional companies, successful companies, and they're now thinking of tokenization, either having community tokens or tokenize their loyalty programs, or have, using tokenization as a fundraising mechanism, reward mechanism. All these different ideas are coming out, and people are pursuing these ideas. I think will drive, at least be a big part of the driver of next leg of adoption.
Do you think it's something that people, I guess consumers or communities, is it something that they're going to choose to do, or is it something that's going to be kind of, forced on them? Because it's something like looking at other, I guess, like larger use cases of something like email was something that I feel like at first was a cool, like nerdy thing to use email, and people thought there'd never be a use case for that. And then at some point you needed an email address, and it's something that people maybe didn't want to do. Or even I think social media was the same way, that there's a point where it's like you needed a Facebook account to be part of this group or to RSVP to this event. And it's something that people were reluctant to do even if there was a use case for them. Like, is that the future for the masses, that eventually, their bank is just going to give them a crypto wallet and say, you have to use this now? Or their loyalty program, their airline is going to say, sorry, your loyalty program is like, you have to get this, wallet and it's on Polygon, and now that's where you're going to accrue your air miles, right? Is that will it be forced on people, or will they gladly adopt?
I don't think you can force people to do anything for real adoption. People have to see what's in it for them, right? And in this case, what's in it for them is pretty clear. Like using the example that you just gave, if your airline has a loyalty program and now the airline tells you, oh, it has to be in this token form, how does that benefit you? It benefits you tremendously because now your loyalty tokens are tradable. On a secondary market, you can have immediate liquidity. Previously, your loyalty token only, you cannot transfer or sell it to anybody else. So it's really a mechanism for airlines to do differentiated pricing, volume pricing. So if you imagine if you suddenly give a secondary market for that token, for that loyalty token, now everybody can trade these tokens. You have more incentive to accumulate these tokens because now it's like immediate cash for you. So it's definitely more a benefit on the consumer side to have liquidity for the values that they accumulate. On the producer side, on the company side, that is a different question, because that means a pretty dramatic change to their existing business model. So if you're an airline, you have a loyalty program that relies on basically this differentiated pricing by sales volume. Or you fly more and we give you a more discounted price. This business model is very different from, now all the loyalties are in token format, which is tradable on chain on secondary market. That means you're giving pretty much everybody the same discount. Because if I want to have some discount, I just buy some miles, right? So in the equilibrium, in the perfect the equilibrium state, you're giving everybody the same discount. So that is an entirely different model than what the airline programs are running today. So that's on the company side. That's something they've got to think about. The trade-offs, the benefit and cost of having.
So how are they going to do that, Tascha? Like you were saying, you already talked to some companies, and we first met. We work with some brands as well, both as they advertise on our platforms, and we also consult and chat with some of them. And that is really hard for some people to understand, that it's like you are going to be selling a product, or at least from the NFT perspective, it's like you're selling people a product, but then the consumer is going to be able to retain the value and trade it on their own and have full custody of it and do whatever they want. And that's something that's really new for people, right? Outside of companies that are used to having their sneakers resold or baseball cards or something like that. That's normal, but for a lot of other products, that's brand new. In your experience, I'm assuming like you might be having some of these conversations, or even if you're not, as an outside observer, what is that shift going to be like? And are some of these companies going to be able to do that?
Like any adoption, this is going to be not like every company will be doing this overnight, right? It's going to be, you will have some leaders. You will have some companies that start experimenting and hit a jackpot and discover this as a new marketing or growth mechanism for their products and services. And other people will pile in. It's like the same thing was, 10, 15 years ago when the social media just started. If you're the first person advertised on Facebook, or you're the first 10 people advertised on Google, you did really, really well. Now today, if you do Facebook advertising and Google advertising, it's like something that everybody has got to do because it's like a standard marketing channel. Otherwise, how are you going to find your customers? But the return from those channels have greatly diminished, right? So because everybody are doing them. Now you will have the same thing with tokenization as a growth or marketing mechanism, is that you will have innovative companies that have the financial backing or have the vision to take some risk in exploring this as a new growth hack or growth mechanism. And if they succeed, other people will follow. So that's, you start to see more and more companies are thinking in this line and trying different approaches in terms of their tokenomics, in terms of how the thing is designed, who do they distribute to, how much value do they give their token holders, how does this integrate with their actual product. You have different thoughts and different experiments going on. At some point, we will see some breakthrough and other people will follow. That's always like how new technology is being adopted.
That FOMO is real, even for bigger companies.
Exactly.
Tascha, I do want to chat more on the I don't know what the right way to put this is. You referred to hardcore degens, and I feel like that is what many of us are here at the First Mint and in our community. Is that we many of us started in Top Shot and we've kind of held on, and now we've probably flipped some great JPEGs. We've maybe some of us have tried staking in the past, and definitely most of us got absolutely wrecked in the last couple months. And that's okay. Maybe for some of us it's our first time around, or at least to this extent. And I think many of us are happy to be here. What I'd love to ask you is this down cycle, this bear market. Is this something, and you by far are probably the most qualified person that we've had on the show, being a PhD in macroeconomics and living and breathing this type of stuff. I'm assuming this bear market, did you see this coming? Did you know or have a feeling that crypto would implode as much as it has?
The answer is yes and no. Okay. The reason yes and no is because the yes part is I did see this coming, in the sense that since later last year, the Fed had been pretty clear in their forward guidance, in terms of what they're going to do this year, which is going to tighten, right? And their stance has been increasingly hawkish over the past, 2-3 quarters or so. So at the beginning of this year, we started seeing liquidity growth started not going down, but the acceleration is starting to slow. And that reflects the general tightening of financial conditions in the risk asset space, not just crypto, but for other asset classes as well, reflecting the shift in the stance of the central bank. And we live in a time, unfortunately, this is a tail wagging dog time, that financial markets really look to the central bank for direction, and the central bank actions has a really disproportionately high impact on financial market, on the risk assets, compared to most of the time in history. So in that sense, I did see that coming, in terms of, we probably have more volatilities in the market, and we are going to trend down this year. That was my stance at the beginning of this year. However, what I did not see coming is the magnitude and the speed of this drop. At the beginning of the year, I thought, if the quantitative tightening going to start in the second half of the year, which it just started in June, right? I thought that is going to be the biggest impact on market liquidity. So, in other words, have the biggest impact on prices. So, at the time, I saw the first half of the year we will have increased volatility, but would not have as big of a price drop as we have seen till now. So that was a surprise to me. So I think the reason for that is because we really got hit by several shocks all at the same time. We had the central bank, U.S. Federal Reserve, primarily change its monetary stance, pretty drastically took a U-turn in a very short period of time. Secondly, we had inflation situation worldwide, especially in advanced countries like the United States, going up. Inflation going up dramatically, and that in itself is a liquidity tightening mechanism, because when prices higher, you have households and companies have to spend more money on buying the same things. That means they have less money left to buy anything else, including risk assets. So that is the financial tightening. And also we had the Ukraine war. And that created also, negative affected liquidity in the financial market and affected sentiment, and also feed into the inflation situation. So we had all these shocks coming together. And also at the time, what I didn't factor in is the leveraging impact in crypto and how much spillover that is going to create to the rest of the sector. We had several large players, crypto funds, shadow banks in crypto, which they are because it's all over in the news, going down. And that created this domino effect into the rest of the sector. So that deleveraging impact is much higher than I previously expected. So as a result, we are where we are, right? So we have the crypto total market cap right now is like 800 to 900 billion. Okay. So to me, this cycle feels not identical, but has a lot of similarity to me compared to the dot-com bubble burst in 2000s. Now, I know in previous crypto cycles, people also say that. Right. In 2018, you heard people say, oh, this is the dot-com of crypto. But to me, this one we had is more similar to dot-com of crypto. Why? Because we are, first of all, we are at a similar, I would say, adoption stage. We're at like crypto users, you read different statistics, different metrics, they give you different measures, but I would say maybe like 300 to 400 million people worldwide more or less actively have used the crypto product. So that's the like adoption base, about 5% of the world population. If you go back to 2000, you look at how much is the internet penetration at the time, it was at a similar point. Right. And also you're at a stage where you have these products. Right now we have Web3 product, back then you had dot-coms. It seems like they sound good on paper and they seem to have a certain degree of product market fit, but it's really not quite there yet. The infrastructure is not quite there yet. The business model is not quite there yet. The adoption underlying user base is not quite there yet, but it created a lot of hypes. And thirdly, you also have a situation that the central bank like drastically tightening its monetary stance. That's also a backdrop that was similar to what happened before 2000 crash. And arguably, this time we had on a bigger scale. The tightening is on a more drastic and faster scale. So all these, looking together, I think this cycle bust had a lot of similarity to post-2000. Now, if you look at the magnitude of NASDAQ drop after post.com, over a year and a half, after the dot-com bubble burst. You compare that percentage drop to where we are now, you kind of, applying the same percentage to the crypto market cap, we are kind of halfway there. So right now our top crypto market cap last year reached at the height was like close to 3 trillion. Now we are at under 1 trillion, all right? If you apply the same percentage drop of dot-com to this crypto cycle, that means we are heading to about, 500 billion also. So obviously the history rhymes, they don't repeat. You're not going to get exactly the same, right? But just to give you an idea of the magnitude, if you apply the previous similar situation kind of scenario, we are about halfway there.
That's okay. That's okay, Tascha. That's okay. I think that's something. I think, at least personally for me, I feel like I've come to accept that. It's like I know that there's more bleeding. I mean, you've given us a great picture of like the macro conditions literally that have affected this. Are you looking at this, you're thinking that this will continue through the year, right? And I'm assuming it's like a lot of the same factors you just mentioned. It's like, well, they're not really done yet, right? Like the quantitative tightening, the war, all that stuff. It's like that's still happening. How do we know, Tascha, like I mean, and again, it's impossible to time the bottom, right? And that's obviously a very like trader mindset. But how do we develop, like, if we're say we're relatively new to the market here, how do we zoom out and look at like the length of something like this bear market? Like how do it not, and again, I'm just veiling the way to ask for how do you look at the bottom, but that's still I think a really important question for many of us of, if you're telling us like we're only halfway there, do we just use market cap as that factor? Like, is that what we should do, or how else can we kind of develop that gauge on our own?
I don't think it's gonna be a straight line, right? We're not gonna just go from 900 to 500, in a ski slope, go down there. I expect we will see some uptrend at some point. We've been seeing a little in the past couple weeks. We probably hit a local bottom somewhere in middle of June, right? So, but do I know how long this bounce is going to last? I don't. So do I know when we're going to see some bounce like in the bear market? I don't. There are traders that use more like short-term, supply demand indicators, but that's a totally different framework. Okay.
Right.
So in terms of what do people do? I know such a $1 million question is. I think as a investor, the thing about crypto is for many people that I talk to, the really interesting thing about crypto is that because it's like DeFi is like suddenly got so complicated, like right out of the gate, it kind of motivated a lot of people to learn about financial markets through crypto. Like that was like a gateway drug to learn about trading, to learn about investing for many people.
Yeah.
So I would say instead of trying to see where the market bottom is, use this opportunity to really learn about investing, learn about trading, whether to find an approach that works for you. It's really, I think it's also a journey to know yourself. Your own temperament is going to decide what approach works for you. Are you going to be a long-term holder and investor, or are you going to be a type that flip NFTs every day? So that requires totally different like personality types. You may do one type of one approach may work well for you. The other approach may not, depending on your personality. But you could be successful in either as long as it fits you. So I would say use this opportunity, use this kind of time slowdown in the bear market as an opportunity to invest more in those knowledge. Figure out a way that works for you, whether it's short-term trading, long-term, medium-term, whatever works well for you. And in terms of in terms of market actions, market operations, I think many great investors will tell you that it's really what's the most key is risk management and portfolio management. So you got to learn to manage your risk. Especially I think in such a volatile market, it really, the market teaches you've got to manage your risk no matter what, right? Whether it's bear market, bull market. And then portfolio, and in terms of, how do you see your portfolio? The thing is, I think probably maybe it applies to this audience. I know it applies to many people in the crypto space. I have friends that, live and breathe this space day in and day out. This is the whole world to them, right? And it's a pretty big part of the world for me too. I'm fascinated about the space. That's why I write so much about it. It's very addictive. Yeah. But the thing is, it is a very, very small piece of pie of the entire investment space. Yeah. This is like, we are talking about right now it's under $1 trillion market cap. The whole space adding together. NFT even smaller.
Oh yeah.
So yes, so it's a very small space. It's fast growing for sure. So that's why people are fascinated about this, because it feeds on the hopium of this is a way to get rich faster. But it's still a very small piece of the entire world of assets that you can invest in. So, and also keep in mind, we are also at a stage of a pretty primitive stage about the infrastructure of the space. Now, we can say the big picture is Internet of Values. Everything will be tradable, open public platform, people can build on top, and assets will be programmable. We'll have tokenization of so many more things compared to what we have now. The world will be totally changed. Yes, all very good, but what platforms would that be built on? What actual shape would that take? To me, that is an open question. The Bitcoin chain, forget it, does not remotely have the capacity to become Internet of Values. Okay, Ethereum, the main chain, forget it. Now, but we also have, nowadays, you have other layer 1 chains, you have layer 2 rollups on Ethereum, trying to scale. Everybody is trying to scale, trying to get more decentralized. You have all these exciting experiments going on. And that's very true, very exciting. Some of them look quite promising, but keep in mind, all of this is quite experimental. So this Web3 technology space, infrastructure space, is so far away from being a mature tech. What we have in Bitcoin chain and Ethereum chain, to me, they are sort of a proof of concept. Sort of, first rendition of what a Internet of Values can look like. Would that be the mature way 10, 20 years, 30 years down the road? What infrastructure that Internet of Values will be built on, I don't know. May well not be these chains. It could be not. I have no idea. Because we're in a very early stage experimental space. But what I do know is there's no way that with current infrastructure, we are going to have Internet of Values. No way. You just do the math. How many times you swipe your credit card in a day? 5, 10, 15? Time that by the number of population, 300 million population in the United States alone, okay? So we're talking about 3 to 4 billion transactions in the United States alone per day. Which which blockchain can handle that today? None. So how the infrastructure going to evolve in the future, I don't know. So I think if you keep that in mind, put in the back of your head when you invest in any kind of tokens, that is you're investing in a experimental technology. So do you want to put a large chunk of your net worth into experimental technology? That's something that you've got to consider. It, of course, depends on your stage of life, depends on your income stream, right? All of those things. But you got to see this in the bigger picture of the portfolio of your whole life.
I wanted to ask you, Tascha, like on that, is that, one of my favorite quotes of yours was from a thread I think you had last month or recently, was you were asked, what's left in the product or project if you take the token away for 95% of Web3 products today? The answer is nothing, which is actually like kind of where you left us your last answer there of just, how does that apply to NFTs and how does that use case and what is that going to be for people and what is that, what part of the infrastructure is that contributing to? I don't know how deep you are into NFTs, but clearly, a lot of people listening are going to be there. We're thinking right now, a lot of people are thinking like, hey, I've got maybe I've got a mutant, maybe I've got an Azuki, maybe I've got a, I don't know, whatever other, blue chip project, let's call them, which is, I still find it's kind of funny to call any NFT a blue chip at this point. But a lot of people might have a lot of emotional attachment to some of the stuff they're holding. The value of those has probably gone down 60 to 80% in the last 2 months. And people are really thinking like, well, which one of these am I going to hold? Which one of these is going to be the next Nike or the next Supreme or the next big brand? And am I holding a piece of that or a future holder? If I hold an ape, do I just want to go to a music festival every year? Is that the main use case? A lot of people are trying to figure that out right now, right? And I feel like a lot of what you're telling us, Tascha, is you're looking at it from a scale and infrastructure standpoint. I think many of us in the NFT market are looking at it from a cultural standpoint. Which of these will be relevant? Which of these will truly become great, fantastic brands that are in every store, or that are the Starbucks of the future in a sense? How do we? I don't know if you're even able to answer that, if you're comfortable answering that, but I think for a lot of us right now, we're trying to figure out how to know what we don't know, right? There's no possible way to know which NFTs will win long term, but I think that's a very hard decision many of us are trying to make right now of, if we've got 3 or 4 highly valued JPEGs, we know maybe the price will go down another 50, 70% sometime soon. We want to liquidate some. What do we do? How do we choose? What criteria do we invent for ourselves to even evaluate that right now?
Oh, I don't trade NFTs, but I own some NFTs, but it's mostly for fun. And I have some NFTs that the profile picture type of NFTs, which how I look at this NFT tech is in 20 years from now, there's going to be the typewriters. These going to be the typewriters and mainframe computers in 20 years. And so today, if I'm a typewriter collector, that could be like some old typewriters can be worth a lot, right? Yeah. Are there a lot of typewriters that are worth a lot? No. Because that's yesterday's technology. So to me, yes, there's the culture component. There's the collector value component. The same thing as a lot of antiques today have collector values. Can you know, like 50 years ago, which piece of antique will be gonna be the antique in 15 years? In 50 years, that's gonna have a lot of values. Well, I don't think I can make that call. But the thing is, I do think this batch of NFT technology, the concept of NFT, is something I'm very bullish about. The execution of current NFT, I think that's going to be obsolete, in the medium term. The way that we do NFTs, that we create NFTs today, it's just not. I cannot call them high tech. I cannot call them any kind of robust tech. I give you an example. This is actually not a new critique, but when Twitter came out with their profile picture, they allow you to have NFTs as your profile picture, right? When that came out, I was like, this sounds like fun. I'm going to create an NFT and use that as my profile picture. So I created an NFT, I deployed an NFT on Ethereum, cost me like $1,000. Back then, like gas fees are still super expensive. And so I have the metadata stored in AWS. And basically what's on chain is just that URL linking to your metadata. So that metadata, first when I kind of tried to view it on OpenSea, I couldn't see it. And then it took me hours to figure out, there's any like extra comma in my metadata file. So I had to get rid of that. But that has nothing to do with my on-chain deployment. So because that metadata part, I can change it at will. And since that, I have changed it multiple times. I changed that picture associated with that NFT on my Twitter profile. I just, any day I get tired of the old picture, I put a new one in. It's the same NFT. Does that make sense? I don't think so. Is this robust technology? Definitely not, because this picture I stored on AWS, metadata stored on AWS, I can change it to whatever I want, pointing to the same hash. So I think that the technology has a long way to go. Will we see like 50 years later, we will have some kind of culture values left for some collectible items that created in this era? Yeah, sure, we'll probably have some, but that does not apply to 99% of the NFT collections today. I don't think so.
Interesting theory. I like that. I do think that there's more cultural merit to it, and I think that that's what's drawn a lot of people in. But I do also agree with you that the technology standpoint is not really. It can go a lot further, and I think it will. And I think that hopefully, I hope that does kind of overtake everything that we have been doing, or at least a big part of what we have been doing in NFTs. Although I will say, a lot of people, there's going to be a market, I think, for a very long time for hardcore degens to trade JPEGs. I think that's a part that's always going to exist. Even it's just yeah.
Exactly. So my point is, this is probably not something, at least to me, this is not something that I would hold for 50 years as a investment item. So if I were to play the NFTs, it will be for trade.
Right.
It will be to catch the bubble and burst. We will have these cycles. You will have several of these cycles until the technology gradually matures.
Right.
And as a trader, you can catch those waves, or try to catch those waves, play with those cycles. But as a long-term investment, to me, I don't think so.
Tascha, we only have you for a few more minutes. The really kind of broad, high-level question I want to ask you, while we still have you, and this has been a fantastic conversation. How do you define success in crypto? Like, what is this? Like, when has crypto been successful? Like, when is it mission accomplished for everything in blockchain?
When we stop thinking of this thing as a sector, when there's no longer a group of people that is thinking of themselves as missionaries for crypto, when this question no longer exists, because because it's just a part of everything we do. It's like today, is there a internet? Is there a internet sector, or is just something everybody uses every day? It's something that it's in every sector. Every company has a website. You know, you have to do things online. You have to use the cloud, and you know, every day, probably every hour. So that will be the success to me.
Absolute last question for you, Tascha. For your podcast, your art is you riding a whale in space. Tell me a little bit more about that.
That was when I wanted a logo, right? I thought I want something out of the box. I want something that has a little bit surprise value when people first look at it. So I kind of used a random word generator, put a bunch of random words together, and including me, put in there, and I give it to an artist. I said, well, try to figure something out of this. And we got several ideas out of it, and this is the idea I picked.
Nice. Okay.
With
cool.
me, it's a female astronaut riding a humpback whale in the sky.
Is it supposed to be you?
It's Tascha. Yes, it's a metaverse representation of me, I guess.
Awesome. Well, Tascha, thank you so much for coming on the show. I mean, it's been great to talk to somebody who views the market in that broader sense. I think we learned a lot today, so thank you so much.
Thanks, it's been fun.
And that is going to do it for us today, folks. Thank you so much for listening. Hope you enjoyed that convo. And as usual, hit us up on Twitter or on our newsletter comments. We have comments in the newsletter now to let us know what you thought. Give us your thoughts on what is going on out there in the economic world. Otherwise, we'll see you next time on The First Mint.